Imagine this for a moment. It is the first week of January 2026. You wake up, pour your coffee, and sit down at the kitchen table. You have been waiting for this day for months. The news said Social Security is giving you a raise, a 2.8% cost of living increase. Finally, a little breathing room. You log into your bank account, expecting to see that bigger deposit. But when the number loads on the screen, your heart sinks. The raise is there, but it is much smaller than you expected. Much smaller. Where did the rest of it go? You sit there, staring at the screen, wondering if Social Security made a mistake, wondering if someone took money out of your account, wondering if you did something wrong. I want you to know right now, you are not alone. Millions of seniors across America are looking at their January 2026 deposits and asking the very same question. And the answer is something the news did not fully explain to you. Hello, my friend. I am Misha, your senior policy analyst here at TaxWise Seniors. For years, I have helped retirees just like you understand the rules the politicians write, the agencies enforce, and the news barely explains. Today, I am going to walk you through exactly what the 2026 Social Security raise really means. I am going to show you the official numbers from the Social Security Administration and from Medicare. I am going to reveal the exact dollar amount you will actually receive in your bank account. And I am going to give you 3 clear steps to protect every penny you have earned. But please, stay with me until the end of this video. Because there is one hidden mistake that thousands of seniors are making right now in 2026. A mistake that can cost them up to $2,400 a year. I will reveal it near the end, and I do not want you to miss it. Let me start by telling you about Robert. Robert is 67 years old. He worked for 42 years as a maintenance supervisor at a school district in Ohio. He retired in 2023. He is careful with his money, he reads the news, he follows the rules. When the Social Security Administration announced the 2.8% raise back in October 2025, Robert was excited. He did the math in his head. His monthly check of $2,015 would go up by about $56. That extra money would help him pay the rising cost of groceries and his heating bill. But Robert made one small mistake. He did not check what was happening on the Medicare side of things. In 2024, Robert had sold a small rental property he owned. It was a one-time sale. He used the money to pay off his mortgage. He felt proud of himself. But that single sale pushed his income for 2024 above $109,000. 2 years later, in January 2026, Robert opened his Medicare letter. His Part B premium was not the standard $202.90. It was $284.10, an extra $81.20 every single month. Because of one tax return from 2 years ago, Robert was now paying an IRMAA surcharge. His 2.8% raise was completely erased. In fact, his net Social Security deposit went down compared to December 2025. Robert called me almost in tears. He thought he had done everything right. The truth is, Robert did not break any rule. He simply did not know the rule existed. And that is what I want to fix for you today. Let me explain what is actually happening in 2026 in plain, simple language. On October 24, 2025, the Social Security Administration officially announced that the cost of living adjustment for 2026 would be 2.8%. This raise applies to nearly 71 million Americans. That includes retirees, survivors, disabled workers, and people on supplemental security income. The 2.8% is calculated using something called the Consumer Price Index for urban wage earners. The government measured prices from the third quarter of 2024 through the third quarter of 2025, and that comparison gave us the 2.8% figure. Now, what does that look like in real dollars? The average retired worker was receiving $2,015 per month in 2025. In 2026, that goes up to $2,071, a raise of about $56 a month. An aged couple where both spouses receive benefits goes from $3,120 to $3,208, a raise of $88 a month. The maximum benefit for someone retiring at full retirement age goes from $4,018 to $4,152. Those numbers sound good. But here is where the story changes. On November 14, 2025, the Centers for Medicare and Medicaid Services announced the 2026 Medicare Part B premium. For the first time in American history, the standard premium crossed the $200 mark. It is now $202.90 per month. That is an increase of $17.90 from the $185 we paid in 2025. In percentage terms, that is a 9.7% jump, almost 10% in a single year. And it does not stop there. The annual Part B deductible also went up. You now have to pay $283 out of pocket before Medicare starts paying its share. That is $26 more than last year. The Part A hospital deductible also rose to $1,136 if you are admitted to a hospital. That is $60 more than in 2025. So let us do the real math together. The math the news did not show you. If you are the average retired worker, you got a $56 raise. But $17.90 of that was immediately taken out of your check to pay the higher Medicare Part B premium. That leaves you with a net increase of about $38.10 per month. That is the truth. According to the Boston College Center for Retirement Research, about 32% of the 2026 raise has already been eaten up by the Medicare premium hike. Nearly 1/3 of your cost of living adjustment is gone before it ever reaches your bank account. For a couple where both spouses receive benefits, the gross raise is $88 a month. But 2 Part B premiums get deducted, so the net is about $52 a month. For the average disabled worker, the raise of $44 becomes about $26 after the Part B hike. Now, you may have heard about something called the Hold Harmless Provision. This is a federal protection written into Section 1840 of the Social Security Act. In simple terms, it says that your Social Security check should never go down from one year to the next just because Medicare premiums went up. That is a real protection, and it has saved millions of seniors over the years. But here is the trap. In 2026, the Hold Harmless rule is mostly inactive. Why? Because the 2.8% raise is large enough in dollar terms to cover the $17.90 premium hike for almost everyone. So technically, your check is not going down. It is just going up less than you expected. And even worse, the Hold Harmless rule does not apply to 3 specific groups of people. First, anyone enrolling in Medicare Part B for the very first time in 2026. Second, anyone who pays the IRMAA high-income surcharge, like Robert in our story. And third, anyone who is dually eligible for Medicaid and has their premium paid by the state. Now let me explain that IRMAA surcharge, because this is where many seniors get blindsided. IRMAA stands for Income-Related Monthly Adjustment Amount. It is a fancy way of saying, if you earned too much money 2 years ago, you pay extra for Medicare. In 2026, the IRMAA surcharges are based on your 2024 tax return. If your modified adjusted gross income in 2024 was above $109,000 as a single filer, or above $218,000 as a married couple filing jointly, you will pay extra. The lowest surcharge adds $81.20 to your monthly premium. The highest surcharge adds $487 a month, bringing the total Part B premium to $689.90. And here is the cruel part. IRMAA is a cliff, not a slope. If you earn just $1 over a bracket, you can jump up to the next surcharge level. One single dollar can cost you over $974 a year, sometimes more. This is exactly what happened to Robert. A one-time property sale in 2024 triggered an IRMAA surcharge that hit him in 2026. About 8% of Medicare beneficiaries pay IRMAA. That is millions of seniors. Many of them have no idea why their premium is higher than their neighbors. There is one more thing I need you to understand. The tax trap. The Internal Revenue Service has thresholds in Publication 915 that determine whether your Social Security benefits are taxed. If your combined income is over $25,000 as a single filer or $32,000 as a married couple, up to 50 or even 85% of your benefits can be taxed by the federal government. Here is the shocking part. Those thresholds have not been adjusted for inflation since 1984. Not one penny. So every year the COLA pushes more seniors over those lines, and more of your Social Security ends up taxable. I know this is a lot. Take a breath. Because now I am going to give you the 3 exact steps you must take to protect yourself in 2026. Step 1. Verify your exact benefit amount and your Part B premium directly through the official Social Security website. Go to ssa.gov and log into your personal My Social Security account. Do not rely on what the news says, what your neighbor tells you, or what a Facebook post claims. Pull up your own benefit verification letter. Look at your January 2026 deposit. Confirm the gross amount and the Medicare deduction. If the numbers do not match what SSA shows, you have 60 days from the date of any notice to file an appeal. Step 2. If you had a life-changing event between 2024 and today, file Form SSA-44 immediately. This form is your shield against IRMAA. There are 8 qualifying life events: marriage, divorce, death of a spouse, work stoppage or retirement, work reduction, loss of income, producing property, loss of pension income, or an employer settlement payment. You can download Form SSA-44 directly from SSA.gov Forms SA-44.pdf. Fill it out, attach your supporting documents, and either mail it in or take it to your local Social Security office. Do not wait. Every month you delay is another month of overpaying. Step 3. Check if you qualify for a Medicare savings program. This is the hidden mistake I promised you at the beginning of the video. Thousands of seniors who qualify for these programs never apply. They do not even know the programs exist. There are 4 of them: QMB, SLMB, QI, and QDWI. Depending on your income and resources, your state Medicaid agency can pay your entire Part B premium for you. That is up to $434.80 per year, every single year that you could be saving. You can find the income limits for your state at medicare.gov or call your local state health insurance assistance program known as SHIP. The call is free and confidential. If you qualify, apply right away. That is the hidden mistake. Failing to apply for help you have already earned the right to receive. Now, before we end, I need to tell you something important. Please do not rely only on YouTube notifications for these critical updates. YouTube changes its algorithm constantly. Important videos sometimes do not reach you. Rules change, premiums change, tax thresholds shift. The cost of living adjustment is recalculated every single year. If you found this video helpful, please tap the subscribe button and ring the notification bell. Share this video with a friend, a spouse, a brother or sister who depends on Social Security. They deserve to know the truth too. And most importantly, bookmark the 3 official websites I mentioned today: SSA.gov, Medicare.gov, and IRS.gov. Those are the only sources you should fully trust when it comes to your benefits. You worked your entire life for this money. You paid into the system through every paycheck for decades. You deserve every dollar that is owed to you. And you deserve to understand exactly what is happening to your benefits. I am Misha, and this is TaxWise Seniors. Thank you for spending this time with me today. Stay informed, stay protected, and I will see you in the next video.